With exit polls giving Prime Minister Modi the lead, our next report digs deeper and looks at the likely stock market movements that are scheduled to take place soon. Take a look.
As India's marathon 6-week general election ends, anticipation and speculations loom over the stock market as it awaits the outcome of this crucial democratic exercise. Market sentiments have been oscillating, reflecting the uncertainty surrounding the election outcome. The possibility of various scenarios has led to volatility in the equity markets, with investors closely watching exit polls and gearing up for reactions on June 3rd and the final verdict on June 4th. The prevailing sentiment seems to be tilted towards a continuation of the current government, with expectations of a strong performance by Prime Minister Narendra Modi's Bharatiya Janata Party and its allies.
So I think markets do not seem to have factored in any possibility of political discontinuity, and which is why I think there has been no correction and markets are hitting all-time highs. And this could well continue till June 4th, when the rubber hits the road and we get to know about the numbers. And there is nothing much to look forward to by the market participants beyond that.
However, there are apprehensions about the margin of victory, with some predicting a potential dip in BJP's seat count compared to previous estimates. This was reflected in the fear index, or a gauge of volatility rising to the highest in 2 years and not seen ahead of election results previously. In the event of a decisive victory for the BJP, markets are likely to respond positively. Reason? Expectations of growth-supportive policies and stability driving rallies in benchmark indices. Conversely, a scenario where the BJP falls short of expectations or a coalition government led by an opposition alliance comes to power could trigger a significant sell-off in the short term. And the market moves during the 7 phases of elections points to mixed sentiment. During the polls, the markets rose in the lead up to 3 of those phases and was in the red in 4. Having said that, stock benchmarks also hit their life highs on Monday this week. The volatility was clear in Friday's moves. The Sensex index rose nearly 300 points in the session, but ended the week about 50 points higher. That reflects the uncertainty of the BJP getting 400 seats, even as the positivity in the moves show a win for the ruling party. Overall, the market's reaction to the election outcome hinges on the degree of continuity and stability it promises. Bureau Report, WION World is One.
For more on this, we are being joined by Sandeep Bagla, who is the Chief Executive Officer at Trust Mutual Fund. Mr. Bagla, thank you for joining us here on WION. How are markets expected to react if the NDA finishes with less than that 400 mark?
I think markets want continuity. Markets do not like uncertainty. And if exit polls are anything to go by, I think the extent of the victory or the margin doesn't really matter. There was all kinds of speculation that what will happen if they get 350 seats or 380 seats or 400 seats. I think that is complete nonsense. As long as the majority and the mandate is there and the continuity is there, what markets should look out for is whether there is policy continuity, and also whether there is resolve to undertake the future set of reforms. Because while we say that India is going to grow at a rapid pace, but to lift from here to the next level, which is add a few more trillions to the economy, is not going to be easy. It's going to be heavy lifting. So a number of reforms have to be there which allow for the full potential to play out. And that is not going to be easy. And I think markets will look out for that, for the announcements and the follow-up action on the continuance of reforms.
Mr. Bagla, you mentioned that markets want continuity. Which sectors do you think will benefit most, given that the mandate remains? You want the mandate is what essentially will determine what effect it's going to have. Given that the mandate remains the way it was projected earlier, what kind of sectors are going to be affected most?
So I would say that, we do not have any control on which way the global scenario is going to unfold. What we have probably greater control is probably the domestic consumption sector. So, we believe that there are mega trends in play, which are like premiumization of consumption, manufacturing, the development of the manufacturing base in India. Defense could be one sector, railways could be one sector. So while the stocks could have gone up in these sectors in anticipation of growth, but I think the theme could continue for more time to come.
And also, if I were to take your opinion on this, what's your short-term target for the Nifty now? How do you project this one to go?
Well, I don't think one should have very short-term targets. Short-term, anything can happen. But I think one should safely assume that the Nifty levels will keep growing at an growth rate of GDP plus a few hundred basis points, which is the way it has been going for the last few years. We have seen that over the last 20 years, GDP has grown in the range of 12 to 12.5%, and the Sensex or Nifty has grown compounded at the rate of 12.5 to 13%. So I think, earnings growth, GDP growth leads to earnings growth, which leads to, equity growth in the indices as well. So I think that theme should continue. So there is no point of taking immediate short-term calls.
Also, yeah. And Mr. Bagla, given that, of course, the opposition doesn't seem to be agreeing with most of the exit polls, but most of them have kind of given this current government another term. Will more foreign investors bet on India now that the political outcome is more or less certain?
See, mostly what happens in institutionalized environment, we are told not to take undue risks when it comes to major events which we do not have the ability to predict. So it's very natural for large institutional players, to perhaps take, a safer option by booking profits and waiting for that event to unfold. And once there is clarity, I'm sure they will be able to enter even 3-5% higher and would have long time horizons to withhold during undue volatility. So I think they will come back. However, we must understand that they have a larger set to choose from. While India market has outperformed, India growth story is intact. We are still 3 to 4% of global markets. So, while the participation is very healthy at current levels as well, but there is no compulsion for them to come running right now and right today. So I think, but thematically speaking,
yes,
this will increase allocations to India. Already on the government bond side, we are seeing that there is inclusion in bond indices.
Yes.
And that will lead to some passive, some active flows from June onwards. And I think similar story could take shape in the FPI segment in equities as well.
All right. Thank you so much for making the time and joining us, sir. That was Sandeep Bagla, Chief Executive Officer at Trust Mutual Fund, joining us from Mumbai. Thank you for sharing all your insights.
Thank you.